Hi there, Paul Marriage from Tolworth Investments here with the May 2021 monthly video for the HI European Market Neutral Fund. Been quite a challenging month for markets, an okay month for the fund with an improving trend after we made some significant changes to the portfolio mid-month. I'll talk about those in a minute, but let's just start with what went right and what went wrong in the portfolio this month. In Europe, our main winner again was Stellantis. This has actually been a really good long for us for quite a long period of time. It had a bit of a wobble last month on the global auto semi shortage, which impacted auto companies, as I referred to last month. But actually this month recovered well, good numbers, still confident of its margin targets. We think it'll probably beat those margin targets. 5 times earnings, 22, looks too cheap. Still got the best of the synergies to come through from the Fiat merger and great exposure to the US through the Chrysler brand. So I think quite a lot coming through there at Stellantis. Very happy with that one to carry on. BNP's had a good month, the French bank. Broad range of insurance, asset management, banking, rising interest rates, 0.7 times book again. Stock we're pretty comfortable with. Moncler's had a good month. Actually, numbers weren't probably as good as the other luxury goods companies. But all the upside here that's been so good for luxury companies in the last decade or two in Asia is yet to come from Moncler. They're not that big there, and that's coming through strongly. So 3 good long wins there for us. If we look at the things that probably didn't work as well for us in Europe, we struggled a bit with Inditex on the short book. That, despite pretty dull numbers, was performed very strongly. I guess what we're seeing there is people getting very excited about reopening generally and shops being open. It's probably a good thing. GN Store Nord had great numbers but came off. The kind of reverse, that was a lockdown winner. Good numbers, but people don't want those anymore. So kind of moving on a bit from that, maybe slightly weak in hearing aids. So a few swings and roundabouts there in Europe. UK stocks, the standout winners in the UK long were Royal Mail, the parcels company, UK Mail company, that's doing inevitably better off the back of e-commerce and sort of some of the issues of the past. It was a consensus short. It's now become a really solid long as they're getting their head around things like labour relations, their product offer, the right sizing of the business. 10 times earnings, and earnings are now recovering after 2 bad years. We think that's probably okay. We think we can probably carry on running that. People are putting some pretty punchy long-term price targets out on that one now. Future Publishing's been good for us as well. Magazine publishing, you wouldn't have thought it was that exciting, but magazine publishing with good websites and some click-through revenue. Also bought the Go Compare insurance comparison website last year. So a few things coming together. It's had fantastic earnings momentum, and I think a few bears here are being squeezed. It's had a good performance again this month. The big short book win for us was Trainline. We've been short Trainline for quite a long time. We fundamentally believe that the valuation of its ticketing platform has been too high. We don't think it's a kind of all-conquering tech platform. It's good business, good app, but not worth a very lofty valuation. And one that held up pretty well through COVID when the railways were being closed. And I think people saw it perhaps as a solution to a new type of ticketing system on the UK railways. Well, in fact, the government's just announced that it's going to launch its own app. The government now owns the train operating companies in the UK after an emergency takeover during the pandemic last year. So I think the outlook for Trainline's pretty tough now to getting that 5% commission it used to get. So shares off 40%, obviously been a good short, but we think actually longer term it looks pretty challenging. I think it's a zero, but it could still fall quite a lot from here. It was on a very lofty valuation. So that's been a great short. That's worked really well for us. So a few wins and losses in the mix of the portfolio. If we step back, the portfolio didn't perform brilliantly during the market wobble. Wasn't a great capital protector. Then recovered pretty strongly into the end of the month and has had good momentum. We made some significant changes in the middle of the month. We decided to make the portfolio much more UK focused. So we've moved 60% of the portfolio to our UK Select model. This is a UK market neutral mid to large cap model that we've been running in the UK for a couple of years at Tolworth. Tolworth, as you know, is a UK house. And we've been really happy with its progress and performance. So we decided to bring that into this fund, and we really think the fund will benefit. In Europe, we've reduced the portfolio a bit down to a smaller number of higher conviction longs. The longs have always been our strong point in Europe. It's our short book that we've struggled with a bit. So focusing on those longs, where our stock picking has been better in Europe, and then maybe using a few more index shorts and a few less stock specific shorts in Europe. So rebalancing the book towards a bit of a UK bias, thinking about just focusing on the best longs a bit more in Europe. We think it's going to give the portfolio a better chance. It's been quite a tough year to date. It's been a tough year to date for market neutral funds generally. We've struggled to get any positive momentum. We think these changes give us a really good chance of recovering through the rest of this quarter and into the rest of the year. Thank you very much again for your support, and we hope you have a super summer.